before we start, on your desks, on your seats are those flyers. So when you look at those flyers, you'll see there's some codes. What are they called? There's QR codes. If you run your phone over the QR code, your photo, it'll bring up a link. The link will take you to the fact page on the website and the legislation. The legislation is the longest, it's the thickest piece of legislation this country has ever sought to pass in its history. That's a record. I think it's about 506 pages. Yep. So if you look at that piece of paper, you will see the links. The links will take you to the legislation. The link will also take you to our fact sheet. The chamber staff stand ready to help with any questions, any information. If you want chamber people to come out and speak at any other events or gatherings that you have that you'd like to talk about it, we are happy to come out and talk about it. So this is just a disclaimer. I think we've got the slide on our purpose. The way that today is going to flow, the purpose of the meeting, as I said, to put a spotlight on the bill and really on the agreement, to engage, seek, and establish a public understanding on the proposed bill and its impact on PNG. I am hoping that today will be like the proverbial pebble into that still pond of water, and the ripples that are created here in terms of you and your networks and your communities, that it can pass through. I mean, we've got university students, we've got business community, we've got noted bloggers like Sam Komati and Dilu here. You've got resource developers from all over the world who are looping in at the moment from via Zoom, and we have the country coming in via Facebook. So as our Vice President said at the start, the industry is not against the establishment of a gold refinery in PNG. The issue is with the approach and with the aggressive ambition that's captured in the 506 pages of this legislation and the agreement. And if you think the legislation is big and the agreement's not, this is the size of the agreement, right? The shareholders deal. And I have to thank the minister who's formally provided it to the chamber and which has now come to the industry for its review. So I think up on the slide, it talks about generally some of our concerns. It creates a monopolistic practice, promotes unfair competition, it jeopardizes the interests of all market participants. We think that a refinery can be set up in this country without all those protections that are in there. In fact, we've had a refinery, we still have a refinery in the country. It's 100% owned by Papua New Guineans. It's called the MRO. It's sitting over there in Waigani. It's able, with some capital, to be reopened and restart. So it's not necessary to introduce a specific law for the purpose. MTSL are there, who are the owners of the refinery. We have all the expertise in the country to refine. For 30 years, we've been producing mineral processing graduates out of Unitec, geologists and scientists out of UPNG. We have all the expertise that we need to run a refining industry in PNG if we want. We don't need to go overseas and bring in any of this expertise back into our country. In fact, we already do a lot of processing on the mines. Porgera and Lihir produce a gold bar after they finish their process. It's all done by Papua New Guineans. It comes out about 98, 99% gold purity. So a lot of these practices already exist in Papua New Guinea if anyone bothered to ask the Papua New Guinean gold experts, of which we have hundreds, if not thousands. So really, we do not need a specific agreement or a state agreement. We don't need a law for this purpose. The government doesn't need to sign an agreement to give over hundreds and hundreds of millions of dollars to an entity, a small undercapitalized entity out of Singapore that does not have the capacity that already in this country thousands of Papua New Guineans have. So a refinery can be built in Papua New Guinea. We have one. The chamber has gone and costed from a world-class engineering firm the cost of building a 3 million ounce refinery either in Port Moresby or Lae. It will cost 60 million kina. It's not a lot of money. Kumul Minerals could do it. Kumul Minerals, I believe, wants to do it. There are entities in the state that, within the government and within PNG, that would be prepared to build a refinery, to have it in Port Moresby or Lae, refine all the alluvial gold that's produced here, and to offer a price to the existing mines to take their gold to process it. The problem with refining business, and the reasons why MRO has had the mineral resources operation that was here before that had problems, is because it's a very difficult business with very thin margins, and you need extraordinarily strong relationships with the producers, and you need significant amount of volume because the margins are so thin. And Papua New Guinea, even though we like to think we produce a lot of gold, on a global scale, we don't produce a lot of gold. And I'll show it with this next slide. So the promoters of this project, and the Papua New Guinea promoters of this project, taken out full-page ads where they've shown this waterfall of revenue that they're going to make and profits. Now those profits, as you know, I've come out in the newspaper and I've poured a whole bucket of Mount Kerawagi water over it, or whatever, the coldest water in the country on it, because I don't think you can believe those numbers. And if that business case had been given to any Papua New Guinean who understands the mining industry and the refining business, they would have immediately torn it to shreds. Unfortunately, we don't believe it's been given to any of our Papua New Guinean experts. And we'll demonstrate to you, as we tried to do in the release that we issued, about why those numbers don't make sense. So we've tried to, we don't have the comparison. Do we have the comparison with Perth Mint? Oh, we have. So I'll just talk so I can see it up here. Do you have both pages? Sorry. So the challenges with a refining business, right, is you need scale, so you need significant volume, much more than the 1.5 million ounces of gold that we could probably produce at our maximum. You need accreditation with a recognized exchange that allows you then to sell your gold. Our problem also is that a lot of our gold that we produce is not capable of being refined. Octedi produces a concentrate, which is a concentrate that comes out that's mainly copper with a little bit of gold locked in its lattice. It has to be processed offshore to release the gold. Hidden Valley produces, Kepaset produces an amalgam of mainly silver with a little bit of gold. Yes? Kainantu produces a concentrate of gold with some silver and some other properties that has to be processed as a concentrate before the gold is released. That has to be processed offshore. So in reality, the only gold that a local refinery can really process is the alluvial gold that the country produces, about 100,000 ounces of alluvial gold the country produces currently, and the door that comes out of Lihir and Porgera. So the volumes are a challenge. So what we tried to do with this slide is to demonstrate why the numbers that have been proposed by the promoters of this project don't make sense. And it's really important that you understand the fact that numbers don't make sense. And you have to ask them, if they're gonna make X amount, if they say that they're gonna make X amount of profits, right? And why is the amount of profit they'll make from refining, where is the Z, the gap, the delta gonna come from? And to me, speaking frankly, that is what I fear, because that is going to be the destruction of our economy in our country, not just for now, but for the future. And I'll explain. This is the most destructive piece of legislation agreement I've ever seen in my life. I've done deals all over the world. I was a lawyer in Melbourne. I did transactions all over the world, mining transactions, banking and finance transactions. I've been involved in nearly every project in this country. This is the most destructive to a country, a deal that I've ever seen in my life. And I'll try to explain why. So first is to understand refining, because refining is a cover. And it's a cover around which this deal is being done. So the Perth Mint is the largest refiner in our region. It basically processes about 90% of Australia's production and about 90% of the region's production. You can see there that it processes 16 million ounces of gold a year. So to get a scale of that, Lihir is one of the world's largest gold mines, right? How many ounces of gold has Lihir produced, Tim? So it produces the gold output of 20 mines the size of Lihir. And Lihir is one of the 10 great, biggest mines in the world. Its actual profit is $26.2 million a year from processing 16 million ounces of gold. The forecasts that the promoters, the Papua New Guinean promoters, are publishing in the papers and getting Papua New Guineans to believe are claiming that they will make a profit of $63.8 million, and yet the maximum gold production that they could get annually, in 3 years, if Porgera comes and starts delivering 500,000 ounces of gold a year, is 1.5 million ounces. The numbers don't make sense. The profit margin on the Perth Mint, which operates one of the world's largest, most efficiently run mints in the world, is 0.17%. You would not open a trade store with a margin of 0.17%. So if we take the Perth numbers, and these are the world's greatest experts on refining, not the people who are trying to promote this project who have zero experience in refining, right? If you take their numbers, they're claiming that they will make a 4.2% return. So they're going to make 3 times the profit of the Perth Mint. They're going to process 10% of the volume. The numbers don't make sense. It's extraordinary. I mean, the scale of this it's insane, like absolute insanity. My grandfather was a young boy when the white man first came into the Wagi Valley, when the Lays came. Like, they saw these guys come out of a plane, they thought they were gods, their spirits come back. Like, we've had 50 years of development. We're not that stupid anymore. How can you come and tell us that we're going to make all this money and give our economy over to you? It doesn't make sense. If there is a slide that you take away from today to talk to people who put this up and say that this is why it's a good deal, it is this slide, because the numbers don't lie. The numbers do not lie. Now, when you take the agreement and you actually open it up, to secure this return, we have committed to give away hundreds of millions of kina to fund these people. That is money that should be going to schools, into hospitals, into this university, into other universities. We've committed to fund these people to get this deal done. To even pull out of the agreement now, I believe there's a break fee that we have to pay them just for pulling out of the agreement. But I will go into it. I'm getting emotional because I'm so angry. But let me go into the agreement so you'll see the other aspects that impact you. This should make you understand now. If they're going to make $63.8 million from this, and they're going to pull out of it maybe a profit of $3 or $4 million out of refining, where is the other $60 million of profit going to come from? Where is the other $60 million of profit going to come from? When we go through the legislation, you will start to see where it's going to come from. Not all of it's going to come from the gold business. A lot of it's going to come out of all of your pockets because of the levers that have been put in place to clip the ticket on everything that you do in daily life. That is my belief based on what I've seen of the agreement. So let me go through the pieces of the legislation. So as I said, the bill puts in effect the project and shareholders agreement between the state and a company called Refining Holdings Pty Limited, a Singapore incorporated company, by establishing a national gold corporation and its subsidiaries. The NGC bill, now this was, I believe, this agreement was signed in 2021. Obviously, the people are very happy who signed it. The people who are probably the happiest are the two expat gentlemen on either side. And as I go through the agreement, you'll understand why. The NGC bill is not subjected to any law except the national constitution and a proposed shareholders agreement. The bill conflicts with 26 existing laws of Papua New Guinea. And we have a list, and it's on our website, a full list of every act that it conflicts with. So the first question you're going to ask is, who is Refining Holdings Company? Who is this company that's coming from the clouds out of that DC into the Wagi Valley that's going to somehow change our fortunes? So Refinery Holdings Limited is a company that's incorporated in Singapore. Incorporated in Singapore 2013, it was operationalized for the purpose of delivering this refining project to PNG, purportedly. It does not come with any previous history. It has 2 directors with 16 shareholders, 14 Australian and 2 Papua New Guineans. Shouldn't say Papua New Guineans, we haven't confirmed that yet. 2 Singaporeans. Now, on the other side is data that we obtained by running a search, a public search through Dun & Bradstreet on this company, because obviously we want to understand who is this company that has secured such an amazing deal. So as you can see, this is the company that's going to deliver all this profit and this extraordinary nation-changing project. Now, as of June 30, 2023, the last financial year, it had a tangible net worth of negative $20 million, total assets of $5 million, total liabilities of $25 million. It made a net profit last financial year of $4.8 million. And Dun & Bradstreet gives it one of the lowest risk ratings of any company in the Dun & Bradstreet rating system, which means it's got high risk of failure according to them. We ran this search 2 years ago when this deal popped up. At that time, it was a company capitalized at 200,000 Singaporean dollars, mainly by these Australian shareholders. Some would contribute 6,000, 15,000, 14,000. It had no liability. It did not have the negative 20 million. And it was effectively just a shell. So a quick question was, how does a company like that build, a $200 or $300 million refinery that they say they're going to build? There's a couple of other things that I want you to look at when you look at this data. So if 2 years ago we looked at it and it had tangible net worth of basically 200 or 0 because the amount of capital that was contributed, how is it that over 2 years it's now got a negative $20 million net worth? That means that over the course of 2 years, somebody has put $20 million into that company. They have spent $15 million of it. They have total liabilities of $25 million because they owe somebody else $25 million for it. Now, I don't want to start a storm, but this legislation is a really good piece of legislation. And I used to be a partner in an international law firm. It would have cost a couple $100,000 to draw this legislation. So obviously, these guys have spent a lot of money to get to this stage. They're going to insist, when the state wants to pull out, they're going to insist that we've spent money, you have to deliver. It's going to be important for the discussion towards the end of this talk. But this is really, really important. We will allow it to be circulated publicly so everybody knows. If your country and your government is going to do a deal with your future with somebody, it's really important that you know who they are and understand who they are. We're also running searches in every shareholder of this company, including the ones that are held offshore in trust in tax havens, to try to find out who they are. Because it's important that as a country we know who we go into business with. So the shareholders' deed and the legislation. The legislation creates a structure which Richard talked about at the start. It creates a national gold corporation, and it has a number of subsidiaries to effect what it wants to do. A national gold bank, a national mint, national gold marketing. They have great names when they say national, but do not confuse this for state entities like the Bank of Papua New Guinea. Do not confuse them for the MRA. These are private companies. They have shareholders. They're not owned by us, and they're not institutions of the state created by the Constitution or anything else. They have names that make them look like they are sovereign entities, right? They make them sound like the Royal Mint in England, which produces Great Britain's currency, which is an institution of sovereign institution of state. They make it sound like the Australian Mint in Canberra, which is an institution of the Australian government that produces its currency. They are not. These are privately owned entities. Now look at the governance. The governance provides that there will be 8 directors. 3 directors come from PNG, are our directors. 5 directors come from the Singaporean entity. We have no idea who they are. Anybody that understands governance knows that if you control the board, you control the company. If you control the decision making, it's basically your company. That directorship goes all the way down. National Gold Bank. When I talk about National Gold Bank and I talk about why are sovereign powers being given National Gold Bank, you'll understand what I mean when I say why are we privatizing it and putting it in the hands of foreigners. Because the majority of that board will not be accountable to the PNG people of Papua New Guinea, be accountable to a foreign shareholder. The same with the National Mint. That's going to print our currency. The same with the National Gold Marketing that's going to somehow take all the gold that comes out of PNG and market it and make a profit from it. It's really important that this you understand. When you see ads in the paper that says this is ours, we're going to control it, someday we're going to go, end up buying it 50% back. Why do you have to buy it? You already own it. We have a national mint. It's called the Bank of Papua New Guinea. We have a national gold bank. It's called the Bank of Papua New Guinea. It controls and holds our gold if it wants to. It prints our currency. Smaré set up independence to do that. So do not believe what you're reading because it's not true. So let's go to the next page. So this is where we get into the issues and implications of the bill. I'm sorry, I'm getting upset because it's amazing. So it's absolutely extraordinary. So let's go to the issues and implications. So let me first talk, because I want to talk about how it impacts everybody, the entire country as a whole. So we'll start with its impact on the Bank of Papua New Guinea. So the Bank of Papua New Guinea is the fulcrum, is the pivot. It is like we all sit on a table, our economy, and the table has one leg. Just picture it like that. The top of that leg that connects the table that we sit on in terms of our economy, how we trade, how we control inflation, how we manage Forex, how we manage how the banks operate, how we manage how money flows in the economy, the price of your loan if you want to go and get a loan, that's the Bank of PNG. And in thriving, successful economic systems, market systems, an independent central bank or treasury is crucial. Now, we were set up as such at independence with some government control, but when we started running into problems in the 1990s from government interference, a visionary prime minister that came in, by the name of Smaré Maralta, brought in some changes. And he recognized that it was really important that monetary policy, controlling how much money goes in the economy, and the regulation of the banks, which are the entities that hold that currency and make it available to the people, that it be made independent and not controlled to politics. Because it saw what happened in the 90s when politicians put their hands into PNG BC and a whole bunch of our institutions and interfered into the operations of the Bank of PNG. Those reforms, that 2000 Act, Dr. Sauce, set up the next 20 years of growth that we experienced. For you young people, you have no idea what the 90s were like. Unfortunately, you're probably going to feel it now because I haven't seen this economy this bad since maybe 2005. But the 90s were terrible for us. It was a period where a lot of our optimism, hopes, and dreams of people like, my seniors like Mr. Kessman and others had their hopes and dreams crushed because they saw everything fall apart because of political involvement in our institutions. So the reform that Mekere did, the independence of central bank, after good work by our friends, by the international institutions, the IMF, the World Bank, by the Australian government and others who came in to bail us out, was to recognize and separate the central bank in terms of making it fully independent, regulation of the banks and financial institutions like the super funds, so that your parents could not have their superannuation contribution stolen, but also in the regulation and control of monetary monetary policy and particularly around currency. So this act and this legislation, in order to affect what they're trying to do, which is this regulatory gold monopoly, they've made some really, really fundamental changes to how the central bank is going to operate. And they have undone, or they're trying to undo, all the protections, or most of the protections that Smaré put in place that has led us to this point. Let me talk about them. So the two fundamental changes that have happened with how it gets into the central bank's role is how it now restricts the central bank's ability to issue currency, like the Australian Mint, like I talked about, the Royal Mint does in the UK. It restricts their ability to issue currency, and it restricts their ability to manage one bank in particular. So they can apply the regulatory standards to every bank in the country except for this one bank, which is the bank that they own and the bank that they control. And it's important for a number of reasons, and the consequences will impact you if it goes through, and I'll explain why. If we think the Forex issues and inflation issues we have now are intolerable, if this act goes through, the impact will be at a scale that you would not have imagined. And I am not being overly dramatic. I'm telling you it will happen to a scale that that nobody will have imagined. And the people that are promoting this project do not understand the scale of damage that they will be doing, that they are doing with these changes. The first change is the impact on BPNG's monetary policy function. So the Bank of Papua New Guinea, as part of controlling monetary policy, are there economic students in this room? There are? Business students? So, as you're taught by Dr. Sasa and others, how do you control? So the way you control inflation in the economy is by how much cash you allow, or liquidity you allow to be in the economy. If you see that there's not enough growth, right, the economy is starting to go down and inflation's too low, you start to release liquidity. You either do that through lowering your rates on your T-bills, so people stop buying treasury bills and they start spending money, or you put more money into the market by printing more money and releasing it. So the central bank does this, and it does it. I mean, people might have issues with how the central bank does it, but it's good that it's an independent entity, and it does it according to its duty to manage monetary policy to make sure the economy is relatively strong so that it can provide for all of us. It's a really, really important role. And in doing that role, they're not dictated to by political considerations, right? They don't care about the Prime Minister's popularity rate or election coming up, and the Prime Minister might be worried about inflation or the Forex rate. They do it based on how they think they can manage the economy based on all the different activities that are happening in the economy. And that is a reason why it's a sovereign function, because it's not just sovereign because only the state should issue currency, but then it should be independent so that you protect it from politicians who may be focused on their needs for today, tomorrow, and the next election. And you give it to economists who are trained in this, who've learned from around the best in the world, and they take a long-term view on how to manage the economy and monetary policy so it provides not just for this generation, but for your generation and generations beyond. The BPNG, as I told you, the central bank, it is that table that the entire economy sits on. So they do a number of things with their restrictions. They restrict the ability of the central bank to now go and produce a currency on its own. They have a particular clause, I'm not sure if it's here, is the clause there? They have a particular clause that says the central bank is still the authority that issues currency. The very next clause says the central bank may not issue currency without getting it through the National Mint Company. It provides that the National Mint Company will enter into an agreement with the central bank on the terms and conditions around which it will, including the price, around which it will supply PNG Kina to the central bank. Central bank independently now cannot decide how much currency it is willing to issue at any one time. So it provides that the central bank and the National Mint will sit and talk, the governor will sit. If they don't come to an agreement, they can go to a third person. And they call that person the Director of National Equity or State Equity. That person is a government minister. And that person will make a direction that is binding on the governor of the Bank of Papua New Guinea. That is a politician making a direction that is binding on the governor of Papua New Guinea, or the governor of the Bank of Papua New Guinea, as to how much currency they can produce at any time, and the prices to be charged by the national mint to produce that currency. Now, you remember the start of this session when I started talking about the business model and why the refinery business model did not make sense with the numbers they're talking about. I hope the pieces start to fall into place for you. So we have a situation today where the central bank manages inflation by tweaking interest rates, the Kina facility rates, but also by how it decides how much currency to put into the economy. And it does it when it pulls in all your old notes. You've seen the ads. It pulls your old notes, it replaces it with new notes. Sometimes it replaces it with more new notes. Sometimes it replaces with fewer new notes, depending on how it wants to control the amount of currency in the economy. Now imagine now if you have a third party. Central bank can only take currency from them. They tell the central bank how much we're going to give you, at what price we're going to give you. And if that third party is incentivized to give you as much currency as it can, because it makes its money from how much currency it gives you, the central bank's ability to control monetary policy is now severely rescinded, because you now have the effect of dumping significant amounts of currency into the PNG economy. If the central bank does want to release those currency, it can hold them back, but it has to pay them for every currency, every note, every 1 kina note, every 10 toya coin, every 50 kina note, every 100 kina note that they decide to give to the central bank. This is how you start to build a business case like this. Keep in mind, at the moment, we don't pay for this. The central bank does it. They do it how they want. They get a printer to print the money. They control it. They have it really well controlled. They put it out. And they manage currency. We now give it to a third party. 5 directors are foreign, 3 directors are Papua New Guinean. We're giving it to a foreign company. Do not believe that it's a Papua New Guinean company. This is a foreign controlled entity, and they control now the amount of currency that's given to our central bank. There is a word that you learn in economics and in business class at UPNG. It's called hyperinflation. We may have a high rate of inflation today. That is the reason why Papua New Guineans now cannot afford to buy biscuits. They can't afford to buy things that 3 years ago they could afford to buy. It's because we have inflation. We do not have high inflation. Our kina still has value. The 1 kina still has value. Hyperinflation is what happens in countries like Venezuela, in countries like Zimbabwe, when your currency loses all value because there's so much of that currency that exists and nobody sees any value in your currency. It's demand and supply. We have never experienced, touch wood, in our history, have never experienced hyperinflation. We've now given the tools to someone and incentivized them to dump currency on our bank. This is the impact of these clauses. Nobody who promotes this project talks about this impact. It's really important that you all understand, and you read the legislation, and you look at the impact it does. Hopefully, the newspapers will run a statement that I made this afternoon, tomorrow, about the impact that this will have on inflation in our country, and I have named the clauses to look at. The other change that it makes is that it provides for this entity called the National Gold Bank. National Gold Bank, again, is owned by the NGC, which is majority owned by this foreign entity. 5 directors are foreigners, 3 directors are Papua New Guinean. The National Gold Bank is designed to hold the country's gold reserves. It's designed to hold the country's gold reserves. The legislation provides that it will be licensed by the Bank of PNG under the Banks and Financial Institutions Act. A really, really important act the Smaré brought in to protect the banks and the super funds from what we saw happen in the 90s. So that what happened to PNG BC, where it became the piggy bank of politicians, would not happen to any of our banks. Super important legislation. The Act provides that the National Gold Bank, when it's set up, will be given a license. Now, the Banks and Financial Institutions Act has a number of requirements for you to be given a license. There's a requirement that all your officers, including your directors, are fit and proper persons, because a bank holds money on behalf of the public. You have to be fit and proper. You have to have a minimum capital threshold. You have to have assets, because you're going to hold people's money. You have to have assets to cover it in case they come and take that, people want to come and take their money. So there's a number of really, really important provisions in it. There's also provisions within the prudential standards of how the central bank administers the Act. And part of those provisions is to stop money laundering and things where people are laundering profits of corruption and theft through the banks. It's really important. This is the reason why it's so hard to run transactions with BSP, to run transactions with Westpac, and all these other banks. It gets difficult. It's why the KYC process, know your customer, where you have to provide so much information so that the bank knows who you are, so that when the bank gets audited by the central bank and also by the international partners that deal with our banks, they can understand that the banks, when it puts that money through and it sends it overseas, the money has come from legitimate sources. It's money that you earn through your hard work, through your trade store, through your job, through your cocoa garden, all these things. The reasons why they're there is to stop people laundering proceeds of crime and theft through. It's very important. And so the central bank is the entity by which, again, we regulate and make sure that all of our banks are operating properly, and they're able to cover the assets for when you want to go and take your money out, they have the money to take it, that somebody else, a politician, hasn't come and gotten it, or a corrupt director hasn't come and gotten it, or a corrupt managing director hasn't stolen the money. And so when its customers come to get the money, they're able to take the money. So that's why the legislation is so important. The changes that they've brought, and I don't think we have it all in the slide. Number one provides that the National Gold Bank will talk to the Bank of PNG about getting a license, about all the requirements to get a banking license. And they'll try to satisfy it. If they don't satisfy those requirements, they will go back to the Minister for State Equity. Remember this fellow? The Minister for State Equity, who will make a direction on these requirements, and the license will be given. So what it means is that all the protections and restrictions that we put in place to protect banks, and particularly to protect our customers, are removed or loosened for this entity. So I'm just looking, because I think I've got the clauses here. I will share them later. So the other important provision is a provision in the National Gold Corporation Bill that provides that if the bank wants to apply or enforce any of its rules, including penalties against the bank, it will first go and talk to the director of the bank, to the CEO of the bank. And they will agree on the penalties and whether those provisions can be applied to the bank. If they don't agree, again, it goes to the Director of State Equity to determine the outcome. So effectively now, actually, before I get to that, there are other clauses that says that it can carry on any business that any other bank does. There's also a provision, and Gretel knows this provision, that says that the central bank will not issue another banking license to any other bank or any other entity to conduct any business that's inconsistent or clashes with the terms of the license that's been given to the National Gold Bank. So it's a bar on banking competition. So what does that lead you to? So you have a bank that's been created that does not need to have, if the Director of State Equity requires, does not need to have the amount of capital to back it up, like BSP, like Westpac, like ANZ, like all of the banks in our country. You have a bank that if it does something wrong, central bank cannot hold it to account or penalize it, but that it's permitted to do all the types of business which any of the other banks do in our country. And that will also hold the gold reserves that the country is going to hold as a result of this deal. So there are a number of consequences of this, and I'll talk about a few. I mean, the big one is the loss of confidence in our banking sector, because you have everybody playing by one rule, and one entity that holds our gold reserves, that's also able to do banking business, that plays by another set of rules that is effectively regulated by consent. I will only regulate you if if your managing director says, I'm happy with how you want to regulate me. If we disagree, we send it to the director of state equity, who's actually a director on their board and controls the state's investment in that entity. And so the implications, there are a number of implications. The first one is that, so not many people, or maybe some of you know, is that PNG is already used to be on the grey listing for internationally in terms of a country where its banks could do business with other banks. This impacts whether our banks are able to get currency to do trades, right? And we are a country that has difficulty accessing Forex, not just because of our demand and supply, but also because so few international banks are willing to deal with Papua New Guinean banks. We've been blacklisted by a number of different international entities already, and that is why it's so difficult. We're lucky that we have the Australian banks here that have very strong relationships, like ANZ and Westpac, with their parent bank, and they're able to also help us. But companies like Kina Bank, which is not an Australian bank, had to struggle for 2 years to find a counterpart bank, international bank, that was willing to deal with it to be able to do Forex trades. When you have such an important player in the economy, that's a bank, that's dealing in gold, right? Gold is a commodity that you transact in US dollars, right? It directs it in Forex. That it does not have any of the AML, anti-money laundering provisions that the central bank enforces against all the banks to protect the international banks. It does not have any of that applied to it if it does not wish to apply to it. Suddenly our risk rating goes up. What it means then is that those companies, those banks that deal with our banks, to accept that when they say we want to do a trade with you and send you Kina and you send us US dollars because the Kina we're sending you is legitimately sourced, they say, well, we can't trust dealing with you guys anymore because there's such a big player in here that is outside all these protections and provisions that protect us, that gives us assurance that your currency is legitimate, income is legitimately sourced. So that's a problem. And our problem is that there's an international entity that's just done a review of us, and they have us very, very close to a grey listing already. And when we are grey listed, it'll make it extremely hard for banks to justify continuing to do business with us. When it gets public and when people start to realize there's a banking entity that's going to be outside the regulation regime that can be outside the regulation and control of the central bank, and particularly the AML standards, it becomes a big problem. So imagine, you saw was it the headlines yesterday about Forex crisis? Was it yesterday, day before? Imagine a world where nobody's willing to deal with you for Forex. We have a Forex crisis, but we still have countries that are willing to deal with us, or banks that are willing to deal with us for Forex. So that is the other consequence and its impact on the central bank that we need to raise. And this is the reason why it's really important that when you go through this legislation, Doctor, I wanted to come here a couple of weeks ago and do a talk for the law students to talk to them about the importance of reviewing legislation. It's why it's so important to review legislation before it's passed, and then to advise the leaders in government so they understand the implications of the legislation that they pass. Because you have to look at what the consequences are. This is catastrophic, in my view, with my background and my understanding of our financial system and our vulnerabilities. This is catastrophic for us. Some other interesting parts of the legislation that should be talked about. So the bill looks at providing a number of protections for employees of NGC and all of its subsidiaries. And it's amazing some of the protections they have. So they have this concept of an authorized officer. And the authorized officer is an employee of the National Gold Corporation. So if you're, and its subsidiaries, if you are, an authorized officer, you have the ability to be armed outside the Firearms Act. You have the ability to exercise certain police powers that are given to the Gold Police that's created by this act, but also given to authorized officers, which are employees of this company. And the powers of seizure, detention, entering of premises. Ostensibly, it's to say to seize gold, but it doesn't actually say to seize gold. So the language is very large. It's really interesting. It's really interesting because you go through all these clauses and you start to think about what happens if people really utilize the freedom that they're given. And what it creates is a special class of employees in the country. These are not state employees. Remember, these are not state employees. These are employees of a privately owned company that is majority controlled by foreigners. Anybody they appoint as an authorized officer has these powers, ability to arm themselves outside the Firearms Act. You don't have to go and get a gun license from the police commissioner. They also have, there's a particular clause. Have you got clause 617? Is that up? They also have, they take the concept of the authorized officer a little bit further by having what they call an exempt person. This one is amazing. I told the U.S. ambassador about this today. I asked him, how did you get in the country? He said, well, I showed my diplomatic passport. The diplomatic passport, the diplomatic unit is fantastic. They have a concept there, called 617, and it's supported by 935 and 948. A concept of this exempt person status. And if you look at 617, it says the production of an exempt person, of their exempt person identification. That's an identification provided by the National Gold Corporation. It's evidence of that fact that they are an exempt person. And no laws, no laws can apply to them. So what does that mean? You try to read it as far as you can. So you got people that can enter the country, not diplomats. Not diplomats, the people who can show their company identification and can get entry into the country without showing their passport. The bags are not searched. They can also leave the country that way. It's, it's extraordinary. So there's a lot more, so I'll just keep going. So it's a special class of people, and they don't have to be Papua New Guineans. They can be from anywhere, wherever the company decides. So I think we've talked about the Gold Police. And the slide talks about what the Gold Police does. It'll sit under the Gold Authority. It'll be able to utilize police powers. It'll be able to be armed without the application of the Firearms Act. I think there's been a bunch of discussion on the impact of Gold Police. I'll just move on because I'm a little bit worried about time. I think we can talk a little bit about the broader impact, the impact on the industry. So the first thing is the impact on the alluvial mining industry. At the moment, and there's some conjecture about the industry, about whether alluvial miners are getting the best price, about some probably best practices with some, alluvial gold going across the border to Indonesia and other things. What the act does is actually makes it so that they can only sell to one entity. And when you can sell to one entity, the entity controls the price. There's no guarantee. There's nothing in the legislation that says that National Gold Corporation and its subsidiaries has to pay a proper spot price or proper gold price for the price. At the moment, just like where Dr. Sauce and I come from, when you get a truckload of cocoa that comes in a WeWack, you get somebody that runs from gate to gate of all the cocoa buyers, and if somebody is like Olam or outspends 1 kina higher than Eggmark, they go there. The gold people who sell gold do the same as well. They look for where they can get the best price and they go. This removes that. So it has a huge impact on the alluvial gold industry in terms of moving operators out of the gold industry, out of the alluvial gold buying business. And the alluvial gold buying business plays an important role in supporting ecosystems, rural ecosystems in parts of our country. Wow, Bulolo, you saw them marching the other day. But it does it everywhere, in the CPIC, up in Enga, in Western, in all parts of PNG. There's anywhere PNG is amazing. Like there's alluvial gold everywhere. Bougainville. I mean, nobody can deny the impact that alluvial gold has had in terms of helping provide incomes to Bougainville as it builds itself back up. There is no restriction on this in terms of its non-application to Bougainville. So I'm not sure whether the ABG has considered that in terms of its impact on them. So we're concerned about that, right? We think if you want to regulate the gold buyers, regulate the gold buyers. But don't put in place a monopoly process and provide no price protection or no diversity of buying for alluvial miners. The other thing, and I talked about it a little bit earlier, is really, it comes back to the refinery question. So this thing is all about building a refinery. There is nothing in the legislation that obligates a refinery to be built in PNG. There's nothing in the legislation that says you must build a refinery in PNG. It's interesting. So they chose not to put in an express obligation to build a refinery in PNG. But they put an express provision, where is it? They put an express provision, section 214. Is it up there? This act does not, and no other law shall, limit or preclude the National Mint in its discretion from processing or refining gold. Look at the last line, with another smelter or refinery wherever located, including in any foreign country. It's interesting, right? Is that a drafting oversight, or is that deliberate? So we have discussions with the country at the moment, as you know, has taken loans with the IMF and with others. There's a whole concern by a lot of our donors about fiscal responsibility, the amount of loans, how we use the money. We entered into an agreement with the IMF. There's a number of conditions in that agreement. One of the conditions is about the independence of the central bank. It'll be interesting to see what the IMF said. They've so far been quiet about how, after their review of the legislation, how they see it impacts them. But if you talk about fiscal responsibility and the obligations the states take on, what's interesting is that there's a guarantee by the state that's provided. And it provides that the guarantee will provide an unconditional guarantee to the company and subsidiaries. So this means that the state assumes full responsibility for any operational costs or any failure. It also means that the state unconditionally guarantees the payment of all monies due and payable by the company, the National Gold Bank, and the National Mint in respect to their respective gold purchase, refining, barring, minting, or sale activities under the Act. So what does that mean? There's no guarantee that they will pay you a world price. The only guarantee is that if they don't pay you, the state's going to pay you. Just think about that. I mean, that's extraordinary, right? So when you think about how much gold the country produces, and if you enforce a gold monopoly that says, a regulatory gold monopoly that says Porgera has to give you all their gold, Lihir has to give you all their gold, and the company has as its base this guarantee that says, well, if we don't pay Porgera or Lihir, the state's going to pay. Immediately it means that we are on the hook for non-compliance. You and I mean, we pay taxes. Our children will be paying taxes. we're on the hook for all the liabilities that if they don't satisfy the liability. You remember the start of the slide, right? When I showed the company, this is a company that's worth negative $25 million. It has no ability right now to pay Lee here, right? To pay Lee here, what is it, $1.6 billion of annual production? It's worth minus 25, but they don't have to pay. If they don't find the money and they still take the gold, because they have to take the gold, you and I are on the hook for this. So when you talk about fiscal responsibility, this guarantee is really, really important to note. And you should know that all of our international partners are taking note of this agreement. And now, sort of at the last, I come to the impact on new and existing mines, which is the impact on the industry. So as I talked about, it requires them to supply the gold, all their gold, to this new entity. And it does it in the agreement. So when they sign the agreement says that all current offtake agreements are invalidated. So when a mine is developed in our country, the state negotiates and signs an MDC or a project agreement. That's what they're negotiating for WAFI right now. And that project agreement provides a basis upon which the mine will operate, will extract the resources, will harvest those resources, will distribute the taxes, the benefits to the developer, to the country, to the landowners. It's all done through the project agreement. As part of giving assurance to the banks that they're able to finance this, there are a number of important elements to the project agreement. And one is that the developer is able to export their gold and sell it for the best price that they can get anywhere in the world. It's on that basis that they provide their money. So these provisions basically put into effect the commitments made by the government in that project agreement that they signed for the refinery that said that all those arrangements now cease. The problem is the government has agreements with all these mining companies. And those mining companies those agreements underpin the mining that's going on. So by signing this, they've breached their agreements, and it's created now an issue where each of those mining companies has a cause of action where they can sue the government. Now, for me, there are a number of questions, like really important questions. Like, I don't understand, how is it that state agencies could have advised our government to sign this agreement knowing of its implications? How could they have advised our leaders to sign an agreement that had such a huge impact on the central bank, on all of the agencies that have been reflected there? Now, we have an information paper which talks about all the different agencies that are impacted and the legislation that's overcome. But this is an issue, and this won't go away. What it means then, if you cannot sell your gold, you cannot operate. If you cannot operate, you shut down until an outcome is sought. We have had two examples of that in our history. One more recent, the other one, as I said, was 1988. Porgera was the other one. And we've seen the impact on the country and the ecosystem as a result of closure. Now, I have a slide here about public-private ownership. As I said, I believe Kumul has been set up as the state agency to participate in mining projects. It has a significant share on Porgera. It owns Octedi and produces gold. It is supposed to be the company that represents our ambitions to participate in the mining sector. There are particular clauses here that limit the ability of Kumul to participate. Now, as I said, we've costed the cost of a refinery to be built in Lae or Moresby, 60 million kina. I mean, it's well within the ability of Kumul to get it done. And Kumul, as you know, is a shareholder in Porgera. It's the majority owner of Octedi. It has the ability to also put stock through a refinery if it decides to build one. So I talked about earlier the impact on 26 pieces of legislation. And we list the 26 pieces of legislation here. Now, it's really important when you ask questions of all of these agencies, what their thoughts were on seeing that they were impacted by this and whether they have given advice. And if they have not given advice, they should be given advice they should be given opportunity to provide an advice to the state and to our politicians on the floor of Parliament regarding the impact and the consequences of how this has limited or overrun some of their regulatory powers. Now, did we have hard copy? We didn't have hard copy. There's a fact sheet. We don't have hard copy. There's a fact sheet that went out via WhatsApp. We've got hard copy, some hard copy here. Hopefully there's some outside if you want to get a hard copy. But I think I saw something that went viral, which is that in a PDF form. It lists all the provisions, it lists the agencies, and it lists the impact. And so if you want some guidance, if some of you are from government departments, you want to see how it impacts you, you can refer to that, you can read it. Then you can, the good thing about it is you can actually go back and pull this agreement. You can pull the act open, look at those particular clauses, and then form your own opinion. Because you understand how the powers of your department more than I do, you can start to see some of the implications. Maybe the things that I haven't seen in terms of consequences you can see, that you can then talk to your minister and then pass that information up the chain. So just in summary, the industry is not against the establishment of a gold refinery in Papua New Guinea. If you want to do it, go ahead. It's affordable. It only costs 60 million kina. You don't need to change any laws to do it, to get it done. We already have a Papua New Guinea-owned refinery. If you want to get them up, give them some capital, get them going. Our issues are really about its impact, the imposition of a regulatory gold monopoly in the country, its impact on rural communities, particularly through its impact on alluvial miners, the rights, the extraordinary rights and privileges it's given to this foreign-owned entity, foreign-owned and foreign-controlled entity, by subverting a number of our laws explicitly in conflict, basically overriding them in the legislation. And then the implications for the economy as a whole, the broader economy, through the consequences I talked about, and the implications through the state guarantee that's provided. So from my perspective in closing, if the state wants, or if a private player wants to do a refinery, go ahead, do it. We should be a country that welcomes all form of investment. But we should not be a country that gives particular powers and privileges that undermine a lot of the laws and obligations that all of us as citizens of this country and companies that operate in this country are subject to. If they come in and operate, they should come in and operate like everybody else. Risk their money the way everybody else does. It's really important that there be ongoing consultation, but for me it's particularly important. The state agencies are given the space to review the legislation and provide their independent view to our legislators as to the impact and the long-term consequences of this legislation. It's also really, really important that the people that are impacted the most by this legislation, which is not the miners, as I explained, it's the people of Papua New Guinea, are also given the opportunity to understand the consequences and ramifications of this legislation and this agreement on the economy and their lives and their interests now, but also into the future. And that you also have an opportunity to make your voices heard. Because whatever's passed if this is passed on the floor of Parliament by these people, the consequences are such that the people who pass it now will not be faced with dealing with it in 5 years or in 10 years. And it'll be people like us, or your young people, trying to deal and unwind with something that's extremely harmful to your interests and to the economy. And that is the reason why we're doing this. I mean, the industry has gone through this. They understand the impacts. They're analyzing what their rights are, what the recourse is. They're trying to make sure the banks and other entities that deal with us overseas not get too nervous. Talking to anybody within Parliament to help them understand the long-term consequences. But it's also important for us that state agencies, the business community, and the civil society, and particularly all Papua New Guineans who understand the implications of the Act, have an opportunity to also make their voices heard to the legislators before they legislate it. Ultimately, in my view, it is one thing to shelve the legislation, but in reality, we should be ripping up the shareholders' agreement. And that is really the ultimate action that the government needs to take. And I think that is basically it. I'm sorry for taking so much of your time. We're supposed to break at 7 p.m. and there's food outside, Tapioca Delight, and there's coffee. Richard, are you willing to take questions? Should we take questions in the next? Sure. So do people want to ask questions, or are we happy to go to the refreshments outside?
Sometimes when you have a comprehensive presentation like this, you probably inherently answered a lot of questions, but anybody got some questions, please? Just, yeah, you are? We got, sorry. I know you doesn't make speeches, he just asks good questions.
Yeah, I'll be quick. Thank you for the presentation, it's really comprehensive. My name is Smaré, I'm with Transparency International, PNG. I think it's really important that you've emphasized that it's not just the commercial interest that you're protecting, but it's something much higher than that, which are constitutional ideals. I think there are other legislation and government policies that are rushed through that could, be subject to the same scrutiny. So we'd welcome Chamber to look at other legislations and policies that are also pursued in the same vein. In terms of the questions, just 3 from me. So firstly, what is the standard of consultation that you expected? And was it met? And by expected, I mean from Chamber. Was there a standard of expectation for consultation? Secondly, it says here in the publication that gold bill kills PNG. So I would take it that your position is it's not in the interest of PNG. Would you say that this is self-interested? Would you say the process has been corrupted? Is this the result of a corrupted process? Can we say that categorically? And then thirdly, I didn't hear the end point. Do you have an ultimatum? Are businesses going to pull out? Do we want people on the streets? What is the message after the information? Thank you.
Thank you. Great question. So there is no ultimatum. First thing, there is no ultimatum. It's really important that I say that there is no. I'm not making any allegation of corruption. I will probably say, if I was going to make a statement, and that is that I think our leaders have been misled and ill-advised. And this is the reason why it's really, we have to be a little bit easy on our leaders too, right? Like, you look at where they come from, they have varying levels of experience. And this is the reason why it's really important that the bureaucracy plays its role, because in the bureaucracy are subject matter experts. And they should be given a space to give advice to the leaders as to the impact. And so my call is give space to the bureaucracy to do their job. Don't rush this through in May. But it's not just about legislation. Take the agreement, take it back, give it to the IRC, give it to the central bank, give it to all these people, give it to every department, and give them a chance to use their expertise. In our public sector, we have Papua New Guineans that have trained in institutions, some of the greatest institutions all over the world, who've been working for 20, 30 years in this subject matter. They are experts in policy. They understand this stuff. So what I would like to say, my advice is take it back. Give it back to the experts and ask them to give you your advice. Because there are statements being made that publicly, that when I look at the act, it doesn't make, there's no consistency between the statements and what's actually in the document. And I don't expect a parliamentarian to be up all night reading a 506 page of legislation. This document was drafted by probably one of the best law firms in the world, because it's taken from everywhere. It's extremely comprehensive. And this is the reason why you need to go to government departments and give them and say, look, why don't you go through this and see how it impacts you, your department, and the role and the function you play, and then give them the opportunity. So that's what I would say. I think there needs to be a broader consultation with the industry about its impact. I think there needs to be a consultation with alluvial miners and the alluvial industry, not just gold buyers, but gold producers. If there is going to be intervention in the alluvial industry, I don't think this is it. It has to be maybe through a code of conduct or some sort of standards that governs them, so they have to account for the gold that they produce and how the market, the price they pay. There are other devices that deal with that. So I think that this is not a call for insurrection, it's not a call for protest. It's a call and a challenge to you all to inform yourself about what this document does, and then to take whatever action you feel you need to take to protect the interests of your community, your company, your country. I think if the state gives space to the bureaucracy, I think this thing won't move forward. Thank you.
There's a question there. Keep your hand up. And just introduce
Good night, everyone. My name is Kennedy. I really don't think I have a question because the presentation was really comprehensive. We can clearly see that the provisions in that bill speaks for itself. They're basically not in the interest of the company. The bill is very specific, as you pointed it out. The question that we all, as educated individuals, need to ask ourselves and walk out of this building is that, what can we really do to stop this bill from moving forward? Because, as you've already mentioned, I don't think one parliamentarian in there is sitting and reading that 500 pages of bill. They will have no idea what they're voting in. That is the fact of the matter. So I'm not really calling out for anything, or I'm not putting words on your mouth to say that you're basically instigating something, but this is a question that must be dawned on every Papua New Guinean. What can we as individuals must do to stop this bill from going forward? We must do something about it. I mean, think about it. We have been, over time, since independence, going against the government for passing bills again and again. And this presentation, though comprehensive as it is, knowing the effect that we will face are 100% certain. So, nevertheless, the bill will be passed. There's no question to it. If you think that we will have a negative answer as to whether or not, to the question of whether or not this bill will be passed or not, I assure you that this bill will be passed. So walking out of this place, you ask yourself, what can I do to stop this bill from passing? Thank you.
Kenny, I appreciate you've articulated that position really clearly, and the intention of this is an information session. There's always risk in empowering people, because when you empower, and I've been involved in advocacy for decades as well, we empower. Advocacy is important, but we have to be very sensitive on how we react. But you've summed it up. If this goes before the floor of Parliament, if I was a betting person, I'd bet that it'll go through. You're quite correct. So we need to think about this. Any other questions, and we can seek to answer some of the questions. Thanks.
Hello, my name is Matilda Koma, and I'm a public servant. I mean, not public servant, I'm from the public, but I'm a civil society representative here. This thing has been, we are aware of what's going on, but it's been fast-tracked. That's how I see it. We've actually seen it that way. And the most important thing that didn't happen is the public consultation. And we thought the CLR, Constitutional Law Reform Commission, would have been a better organization to take this on, or even if that's a bill, then they should also be involved in it. One, because they should be reforming legal documents for us, for the country. It's really exhausting to hear this. as a person, a Papua New Guinean, because definitely we all see that it's not going to benefit any one of us. It's been fast-tracked, hijacked, I'd put it that way. And those two recommendations are very important. But how fast can we, get something done before Parliament? This thing goes before discussions on the floor of Parliament. One, and also the three directors from Papua New Guinea. Are they entities or are they persons? I really need to know who is really behind this. Thank you.
Thank you. That's a good question. For those of us old enough to remember at independence, when those really, really important laws were passed, it was passed after nationwide consultation. And it's really important when you have far-reaching legislation that you try to have at least some form of consultation. I totally agree with you. I think if this, with the ramifications it's going to have, it shouldn't just be all the departments be given the opportunity to do their job, because their job is to advise on policy about the subject matter that they understand the best. That should happen. But there should also be, like you say, public consultation. I don't think what they're trying to do next Wednesday, I think Department of Mineral Policy is advertised for a consultation and saying affected stakeholders come in to present your views. If I'm the Department of Mineral Policy, what are your views? Your role is to advise on policy. Why are you asking all of us to come and give you our views on the policy when you haven't told us whether you support it? Do you support all of these changes that are being made? So I think there has to be space first for the departments to be given their views on how it impacts them. And then, if they say, yes, we think we should do it because of this reason, then we go nationally, and you go around to everybody that's impacted, alluvial miners, the communities, the governors of all the projects, of all the provinces where the projects are, need to be given the opportunity. And then all of us that have an investment in our economy should be given an opportunity to provide feedback. So I think it needs to be a broader consultation. But the first question I have for the DMPGH is, you're asking me for my views? What are your views? You're supposed to be my first guardian against this. I don't know if I'm being controversial, but that's the first question I'd ask for them. And I think I would expand the consultation to give even the people in this room an opportunity to be heard about the legislation.
And Anthony as well, Bank of Papua New Guinea. Just looked at that. Police Commissioner. Does he know? He ought to know. I want to be an authorized officer because I want to bring my own guns in I want to bring my ammunition in. And if I was an expat, I want to walk in without a work permit and without a visa. I want those, as Anthony, I was just going to expand. So I'm pulling to click. Stand up, Government of Papua New Guinea authorities, and comment on this. Not comment, advise strictly on this. So we have a situation where we have the state of Papua New Guinea has committed to a shareholders agreement. And then now, as I mentioned earlier, it's introduced in a bill to give effect to this. My warning to all of us is, let's not subscribe to the argument which is inevitable. That is, in order to protect Papua New Guinea because of the shareholders agreement, we need to put the bill through. No. We'll deal with that. Don't put the bill through, which gives effect to the shareholders agreement. And yes, we have to deal with that shareholders agreement, but independent state of Papua New Guinea, rule a line and deal with that. Don't bring the bill in. It's very hard to undo the bill. If there's no other questions, there's one question.
Before you go to that question, I'll just say one thing. There's no harm in saying you made a mistake and walking it back. We're not going to think less of you if you've made a mistake. It's fine. Right? If you've made a hole in the boat, say, I made a hole in the boat, let's patch it up before we all sink. So